Hello candidates and welcome back to the revision of meetings, compliance and administration. This is a paper done by certified secretaries. We've been revising the past paper questions. Today we're moving on to question number 3, December 2022. Question 3A reads, explain 3 circumstances when it is appropriate for a company to use a common seal on a document. Explain 3 circumstances. That's the question. 3 circumstances when it is appropriate for a company to use a common seal on its documents. The first circumstance is in relation to execution of deeds. Execution of deeds. In some jurisdictions, candidates, the execution of deeds requires the use of a common seal, and a company may use a common seal to affix its official mark on the deed to indicate its authenticity and formal execution. Execution of deeds. 2, contracts and agreements. This is another set of documents that may require a company to use its common seal. Contracts and agreements. In certain situations, contracts and agreements may require the use of a common seal for added legal validity. And the common seal acts as a symbol of the company's authority and intention to be bound by the terms of the contracts or the terms of the agreement. Then we have legal and regulatory requirements. Legal and regulatory requirements. Legal and regulatory requirements. There may be specific legal or regulatory requirements that mandate the use of a common seal for certain types of documents, such as statutory filings, share certificates, bank guarantees, and so on. So companies may be obligated to comply with these requirements to ensure legal compliance and enforceability of the documents. So these are 3 circumstances. 1, 2, 3 circumstances to earn 3 marks. That is part A of that question. Part B reads, list 5 factors affecting dividend policy of a company. Factors affecting dividend policy of a company. Factors affecting dividend policy of a company. What are the factors affecting the dividend policy of a company? One obvious factor is profitability. Profitability. The profitability of a company. The profitability of a company is a significant factor for determining its dividend policy. Companies with higher profits are more likely to distribute dividends to their shareholders, but companies with diminished profits are likely not to declare dividends. Do you understand? It's basic. If the company has made profit, then high profits, then such company can declare dividends. But if there are no profits, if the company is incurring losses, then that will affect the dividend policy. The company may not pay, because dividends are always paid out of profits. 3, or number 2 is cash flows. Cash flows. This is another factor affecting a dividend policy of a company. Cash flows. The availability of sufficient cash flow is a crucial for a company to pay dividends. Cash flow considerations candidates including liquidity, including capital expenditure requirements, and debt obligations can influence the amount of dividends and even the timing of dividends. So cash flows, and the company may have generated high profits, but the company may not have the cash flows. So the availability of cash flow is a factor to consider, or a factor that affects dividend policy of a company. Growth opportunities. Number 3, growth opportunities. Growth opportunities. Companies that have growth opportunities may choose to retain their earnings for investments into the business rather than distributing them to their shareholders in form of dividends. Now, the company's stage of development, the investment plans, and also the capital requirements can impact its dividend policy. So if a company is at its infant stage, then that company is likely not to pay dividends. It's likely to retain the dividends for the purposes of growing the company. But if the company is at maturity stage, this is a company with profits, company with cash flows, such a company can afford to declare dividends. Four, financial health. Financial health. The financial health and stability of a company play a role in dividend policy. Companies with strong financial positions and steady cash flows are more likely to maintain or even increase dividends, while financially distressed companies may reduce and sometimes suspend the payment of dividends. 5, another factor is legal constraints or regulatory constraints. Legal and regulatory constraints. Legal and regulatory constraints. Legal and regulatory constraints. Companies may be subject to legal or regulatory requirements related to dividend distributions, and such restrictions imposed by say company law or financial regulations, or even sometimes contractual obligations, may limit the amount or even the timing of dividend payments. So these are 5 factors. 5 factors. Yes, 5 factors. 5 marks. Profitability, cash flows, growth opportunities, financial health, regulatory and legal requirements. 5 marks. We are going to answer the last part of this question. Describe 6 roles of the board secretary. Roles of the board secretary. What are the roles of the board secretary? The roles of the board secretary. Now, one role the board secretary plays is in relation to governance support. Governance support. The board secretary provides support to the board in matters related to corporate governance. You understand? They ensure compliance with legal and regulatory requirements. They maintain corporate records and facilitate board meetings and decision-making processes. That is one role played by the board secretary. Meeting management, number 2. Management of board meetings. The board secretary is responsible for coordinating board meetings, including preparing the agendas, distributing meeting materials and information, and even recording minutes. They ensure that meetings are conducted in accordance with the proper procedures and that decisions are accurately documented. Meeting management. 3. Board communication. Another role is in relation to board communication. The board secretary serves as a central point of communication between the board and the company's management, between the board and the shareholders and other stakeholders. They facilitate the flow of information to the board and ensure that relevant information is shared in a timely and transparent manner. The 4th role is in relation with compliance and regulatory affairs. Compliance and regulatory affairs. The board secretary assists in ensuring compliance with applicable laws, regulations, and corporate governance best practices. They also keep abreast of legal and regulatory developments. They advise the board on compliance matters and oversee the implementation of compliance programs. That is the 4th role of the board secretary. Then lastly, record keeping and documentation. Record keeping and documentation. The board secretary is responsible for maintaining accurate and up-to-date corporate records, including board minutes, resolutions, and other important resolutions, together with other documents. They ensure that the corporate records are properly organized, accessible, and securely stored. Record keeping and documentation. 6. Board development and evaluation. Board development and evaluation. The board secretary may play a role in board development or training. It may play a role in board evaluation. They may assist in identifying board training needs, organizing board evaluation exercises, and supporting the overall professional development of the board members. So these are 6 roles played by the board secretary. 1 is in relation to governance, meeting management, board communication, compliance and regulatory affairs, record keeping and documentation, then record development and evaluation. 6 roles, 12 marks. 6 roles, 12 marks. We have answered question 3. Thank you for attending the lesson. We are going to take a short break. When we come back, we are going to answer question number 4. Bye-bye.